Before we start the video today, please make sure to like this video. Make sure that you support the channel by subscribing and share these videos all over your social media. Send these videos to your friends, to your associates. But without further ado, I want to get right into what's happening here today. Markets just closed a little while ago. Markets across the board down today. And we got some, apparently some very good news here. Jobs report shows increase of 517,000 in January, crushing estimates as unemployment rate hits a 53-year low. This is absolutely amazing, if you believe this. Now, why were the markets down today with this incredibly good news? Well, they were down today because they know that the Fed now is going to continue to justify raising rates. They want to loosen the labor market, not tighten the labor market. And now all of a sudden, we have a jobs report showing an increase of 517,000 jobs in January. So the bad news today for the market is the Fed is going to continue raising rates, probably for a longer period of time. I wouldn't rule out a 50 basis point rate hike somewhere along the line here. But again, here's this good news of all these new jobs, yet that's bad news for the market because the market understands that the Fed is going to continue to raise rates here. But now that is if you believe this data. I certainly do not. Do you believe unemployment is 3.4%? Last I checked, shadowstats.com, John Williams, he had unemployment around 24%. Now, I see more places going out of business. I see businesses complaining that nobody wants to work. So where is everybody? Where are all these jobs? How manipulated is this data? Please comment down below. Do you believe this data? Do you believe these numbers, the 517,000 jobs for January? I certainly do not. And how many of these jobs belong to one worker? We have people now working 2, 3, and 4 jobs. Let's talk about where the jobs are at. Well, of course, leisure and hospitality was responsible for 128,000 of these jobs. Professional and business services, 82,000. Government, 74,000 jobs. Just what we need, more government jobs. Social assistance, 21,000 jobs. Manufacturing, very weak at 19,000 jobs. So this is where a majority of the jobs are at. And again, many of these jobs are part-time jobs. And we now have people working multiple jobs. Many people now minimally working 2 jobs, many working 3, even 4 jobs. So we're going to have more waiters, more waitresses, more bartenders, and more coffee makers now in the economy. So comment down below. What are your thoughts on this? Do you see the economy getting better? Do you see the average worker getting better? Is the consumer stronger? I don't think so, because here we go. CNBC, fourth quarter of 2022, U.S. credit card debt jumps 18.5% and hits a record $930.6 billion. We are literally almost at $1 trillion of credit card debt. This, the fourth quarter of 2022, this number is only going to rise. Yet they're telling me today, and they're telling you the same thing, that the economy is doing just fine. The consumer is strong. The consumer is flush with cash. Yet the consumer now has nearly $1 trillion of credit card debt. So another warning sign of reality right here. How about this? This was also on the Hedge today. Record 285,000 Illinois residents saw power shutoffs due to non-payment in 2022. So nearly 300,000 people in Illinois had their power shut off. But yet we're being told that the economy is doing fine, that the consumer is doing just fine, yet nearly 300,000 people just in the state of Illinois in 2022 had their power shut off because they couldn't afford their utility bills. But we're going to be told about the stock market rally, how everything's coming back, yet people are working 2, 3 jobs, can't pay their utility bills. I was getting a coffee at McDonald's today, and there were a couple gentlemen talking next to me, and one of them was talking to one of these gentlemen saying, have you checked your latest gas bill? Because he goes, I can't believe how high it was. He goes, I'm getting worried. This gentleman was concerned about how long he's going to be able to pay these exorbitant amounts of utility bills. this isn't a fluke, ladies and gentlemen. This is now the new normal, where your utility bills are doubling, tripling, quadrupling, and people are getting really worried in the real world here of how they're going to be able to afford to continue to pay this, or they're going to be statistics like the people in Illinois where they just get their utilities shut off. The hedge today, if you're a warehouse worker, this Boston Dynamics video might be an ominous sign. Now, millions of jobs are going to be at risk here in the next few years. The stretch robot in this video, it's called the stretch robot. It can load and unload boxes from tractor trailers at warehouse docks, and it can do it very, very quickly. It has superior strength, 7 degrees of freedom, which gives it length and flexibility. Now, here's the catch. Here's why this is going to happen. Robots don't ask for raises, they don't show up late to work, and they don't care about work conditions. So you're going to see this in a majority of warehouses in the future. Amazon will probably be one of the first ones, the Walmarts, all of the giant retailers. This is coming. Jobs are going to be replaced by technology and robots. And we have so many people coming to the United States of America. Where's everybody going to work? How's everybody going to eat? How's everybody going to pay their bills? This is going to be a huge problem. We are really heading down a path of the unknown here, ladies and gentlemen. And it's so imperative and important that you have a skill set other than working in a warehouse, that you're doing something that is going to be in demand, that you have a skill. And you really have to start thinking about what's going to be important, 2, 3, 4, 5 years down the road, 10 years down the road, so that you're not replaced, because a lot of people, their jobs are going to be replaced. Banks tightening consumer. This also on the hedge. Banks are right now tightening lending restrictions. Banks know, they see what's coming. They know what's happening right now. They see what's happening in commercial, mortgage, and in credit card loans, and they're going to be tightening their standards from here on out. And this is going to drive slower spending, and they're going to do whatever they have to do now to reduce risk. You see the billions of dollars they're putting aside for these charge-offs for people who are not going to be paying their credit card balances, people who are just going to skip. And this is another reason why I think we're going to see big cuts in credit lines with credit cards, where people who might have a $10,000 limit are going to get notified that now it's a $5,000 limit, or it's a $2,500 limit, or your credit card has been shut off. They know that people right now are thinking, hey, they're gonna just live off credit cards until the very end, file bankruptcy, and ride off into the sunset and hope for the best. Banks are aware of this. They know this, and this is why restrictions are going to get tighter. This is why these balances, or these lines of credit are going to get cut in half, or they're just going to get cut altogether, because they are going to right now begin to cut their losses. Gold dips as robust U.S. jobs data stokes hawkish Fed fears. This is laughable. I was talking to a couple people today. Think about this. Gold down, as I make this video, about $52 today. Silver absolutely annihilated. For me, this is a buying opportunity. What did I do today? I bought more gold. So you can do whatever you think is right for you. For me, I don't give financial advice, but I'm just, speaking with all of you here, I bought more gold today. And I know that I was reading in some of the comments, people are buying more silver, they're buying more gold. I'm going to continue to play this game. Anytime there's a hard dip like this, I'm buying it. Because if you, first off, believe the job numbers, I think you might need some therapy. And it's fascinating that because of these job numbers, gold got slammed, because the markets are anticipating more Fed rate hikes. Well, that's fine. I don't really care. The Fed can continue to raise. I don't think that that's going to have much importance regarding gold at some point, because the Fed can raise rates. We've seen gold go up with rates going up. So, and we've seen gold go down with rates going up. So, it doesn't, to me, really matter what the Fed does at this point. I'm looking at the economy. I'm looking at the dollar. And to me, the dollar is on borrowed time. The economy is on borrowed time. The economy is collapsing. I believe, in my humble opinion, that we're going to see more problems with the U.S. economy, more uncertainty, more volatility, more competition for the U.S. dollar. And I think that for me, gold is where I'm going to be to protect my wealth. I am stacking cash, I'm stacking gold, and as many of you know, I'm going to be buying some land here, hopefully this summer as prices continue to come down. But to think that these job numbers had anything to do with the price of gold being slammed today, good luck with that. To me, this is a buying opportunity, and the gold and silver market is going to digest this and realize that most of this job data is garbage. Many of these jobs are part-time. Many of these jobs are held, many people working 2 or 3 jobs. So just another reason why to buy gold, because the economy is in shambles. The consumer is weakening. Growth is weakening. I don't think I can even relate this economy to anything other than 1929. When you look at the debt, you look at the deficits, the condition of the consumer, inflation, uncertainty, the future. What is going to pull America out of this depression? We're not making anything here. We only added 19,000 manufacturing jobs last month. This is disgusting. So for me not to be buying gold right now, it's on sale. Anything under $2,000 an ounce, in my opinion, is on sale right now. So I'm going to continue buying gold. I don't believe this jobs data whatsoever. I don't believe the unemployment data. I don't believe the inflation data. None of it. I think we're really being lied to, and if you accept this data, and you're making investments on the information that you're getting, remember the information is very, very manipulated. Why are the central banks stockpiling gold? What do they know? What are they getting ready for? Why are so many banks now putting hundreds of millions and billions of dollars away for these write-offs? Because they know people are going to bounce on their obligations, on their credit cards. Why are so many people now? Why do we have so much credit card debt? Why are people so reliant and dependent on credit cards now to pay their bills? Why can people not pay their utility bills? Why did 41% of small businesses in December, why were they unable to pay their rent? So to think that things are great and things are going back to normal, that is a pipe dream. And this is why I'm going to continue buying gold. This is why I'm going to continue to stack cash, why I'm going to buy land, because I think these are the safest places you can be right now until they're not. But today was just an embarrassment, really, just an embarrassment. Take this weekend and really digest what you saw transpire today with this jobs data, and take a look at the real average consumer out there, and take a couple minutes and read the comments down below and read about what's happening to people in those comments, in the comment section, what's happening to people across this beautiful country. You're going to read comments like I'm reading every day. People are losing their jobs, that they're not able to buy enough food at the grocery store. They're struggling to feed their kids. They're losing a house, or they're forced to sell a house. They're losing a business. The news is really horrifying. And I hope all of you take a little bit of time this weekend and add to your preparations. Today is just another reminder not to be complacent. Markets were down. They should have been down a lot more. But to think that we have all these wonderful jobs out there, most of them part-time, most of them low wage, and most of them are going to be very, very temporary. People are in big trouble, ladies and gentlemen. This country is in big trouble. Please say a prayer for this country. It needs a miracle. Please take a few minutes this weekend and add to your preparations. Get in better physical shape, mental shape, spiritual shape, and financial shape starting today. I'm going to leave it there. Have a safe, blessed weekend. I look forward to speaking with all of you very, very soon. I wish I had better news, but again, more rigged and manipulated data, and they're hoping that you're going to believe this, that you're going to go out and spend money with your credit cards, and that you're going to go deeper and deeper into debt and become a debt slave. Do not get yourself in debt, ladies and gentlemen, whatever you do. We are heading into very, very dark times here, and the people holding debt are going to lose. Do not hold debt. Pay everything off that you can right now. Get your debt manageable. If you can pay everything off, pay it all off. You're going to be much better off during this depression with no debt. But I wish I had better news. I really, really do. But just looking at some of these articles today, U.S. credit card debt jumps 18.5%, hits a record $930.6 billion. I think that says it all right there. Take this weekend, go get yourself some security, go get yourself some food and water, get yourself some gold and silver, get any essential across the board that you can get right now, because more than likely it's going to be more expensive down the road and much harder to get. So get it while you can get it. I think you'll be happy that you did. I think you'll sleep better at night that you did, knowing that you have the extra food, water, security, some extra cash, some extra gold and silver. You will sleep much better at night. And most of all, ladies and gentlemen, get the debts paid off, because if you want to sleep really, really good at night, owing nobody, maybe you have a mortgage, okay, but owing nobody a dime is an incredible feeling of freedom. You will feel free, you will sleep better at night, and it will allow you to maybe take some chances when you need to take a little risk when you need to, or to jump in and buy things that are on sale. God bless all of you. Have a great weekend, and I look forward to speaking with all of you soon.